Hi, my name is Bruce, and welcome to our Quickies video dealing with the amendments to property, plant and equipment and agriculture. Now, if you take a look at IAS 41 on agriculture, the current requirement is that all biological assets, whether they're living plants or living animals, need to be accounted for under IAS 41. Remember, of course, IAS 41 is a full fair value standard requiring you to fair value these items. Now, one of the challenges in practice is that many people can't differentiate economically between, for example, a machine and an apple tree. Think about the logic. If you've got a machine, it's producing items in more than 1 year that you would go out and sell. An apple tree does the same. It produces items, being the apples, that you go and sell. So why do we account for these very differently if the economics are the same? Well, the ISB took a look at this and they agreed that the economics actually aren't that different. And they brought out a new definition of something called a bearer plant. Now, a bearer plant is a living plant that is used in the production or supply of agricultural produce, is expected to bear produce for more than one period, and has a remote likelihood of being sold as agricultural produce. What we're talking about here, for example, are things like orchards, apple trees, grapevines, those type of issues. Let's just take the apple tree example again. Think about it in terms of the definition. It's used to produce or supply agricultural produce. It makes the apples. It's expected to produce for more than one period. Well, we do. These last more than a year. And it's got a remote likelihood of being cut down and sold as spare wood. Well, for example, we wouldn't do that until it was at the end of its life. Now, why is it important to worry about these? Because bearer plants are now scoped into the scope of IAS 16 on property, plant and equipment, which means the key thing to point out is they're taken out of IAS 41 and now fall into a different standard. Now, if you apply IAS 16 to these, of course, it gives you very different accounting. Under IAS 16, you've now got the option to either do revaluation or to use cost. Remember, of course, the revaluation here is an option and all the revaluations go to other comprehensive income, as opposed to IAS 41, where it was fair value to profit and loss. The big one here, of course, is it gives companies the option to use cost, and that was something that many companies wanted to do. Now, how do you account for it on day one? Well, the standard says you need to account for them like self-constructed assets. Remember, of course, the guidance on IAS 16 says that for self-constructed assets, or any assets, you can capitalize the costs until the asset is in the location and condition necessary for it to be capable of being operated in the manner intended by management. What does that mean, for example, for a fruit tree? Well, if I've got a fruit tree that's got a 3-year lead time before it's actually producing fruit, I can capitalize those 3 years of costs. So it's a bit different to some of the other assets because of the long lead time. Remember, of course, now that you're in IAS 16, you've also got to consider some of the other accounting. So, for example, you need to relook at useful lives annually and say, has that changed? In addition, you also need to look at things like impairment. If there's an indicator of impairment, you would need to apply IAS 36. Now, this is effective for all periods beginning on or after 1st of January 2016. So if this is something effective to you, you need to think about whether you're going to apply it and how it's going to apply it to you. Thanks for joining us.